Hey everybody, it's Nick from the Real Estate Nerds and
Brennan.
And we are here today because we want to talk to you about FHA loans. And you can do a lot. You don't have to be a first-time home buyer for an FHA loan, first of all. It's kind of a myth that people think you can use an FHA loan more than once even. But we've got a couple of things that we want to throw out there to help you guys to understand the value of it and what you can do with it.
Yeah, you nailed it, Nick. I'm excited for this one because I think a lot of people just don't know that this is a possibility and can help you financially, where you can have a very low mortgage payment or no payment at all.
Yeah, who wouldn't like that? Would you guys like to learn the way that or the way that you could get an FHA loan, buy a property, and have a small payment, or possibly in some cases no payment?
Yep.
I know I would like to learn that.
Just think about all the different things you could do with that extra cash flow. I mean, I like to vacation.
I as well. I have a couple scheduled.
Yeah.
Another thing that I've coached people on in the past is taking that extra money and applying it somewhere else that's going to benefit you in the near future.
Yep.
An added car payment to principal goes a long way. You'll get that thing paid off real quickly.
Right.
Or even to your mortgage. If you're comfortable with your payment and then you have some other source of income that's coming in to cover said payment, you can still make that extra payment and pay that property off way faster.
And there's good debt and there's bad debt. What we're covering today is good debt because it's going to be producing money for you. Things like car payment or credit card bills, student loans, those can be bad debt because you're not really reaping any income from it. It's just another thing that's coming out of your bank account every month.
Right. So we're not going to make this video super long because we can totally dive into this information and break it down completely piece by piece, but we can do that with you on an individual basis. I know Brennan would be happy to speak with you guys. I'd be happy to speak with you guys one-on-one, so feel free to reach out to us there's probably a graphic here somewhere, I think. We'll put one in there. And I guess why don't we get right into it?
Yeah, let's do it.
Go for it.
All right, so basically with the FHA program, it allows you to buy a house, or let me take a step back. You buy a multifamily house, so 1 to 4 units at a 3.5% down payment. With that, you can also use, let's say it's a duplex, you can use the other side of the duplex, the potential rental income, to help qualify for that loan. And also through this program, your purchase power is much higher.
Yep, and part of that, what Brennan's saying here is, so say you want to buy a duplex down the street, right? And say the price of the duplex is $250,000. And we're being hypothetical here. We can break it all down for you with a real property and your situation later. But hypothetically, $250,000 property, you qualify for, say, $200 or $180 or maybe less, depends. You can take the income that's being earned on the one side of the duplex, now saying that you're going to move in to the other side of the duplex or up and down as your primary residence. This is a key thing to remember. With FHA, you're going to have to use it as your primary residence. I'm pretty sure. And so...
Yep, that's right.
Yes.
Yep. There's no way around that.
So now you have your income from your job, whatever you do to bring income in, and then on top of that they're going to add, say, the tenant on the other side of the duplex pays $1,200 a month. All right, well, that's a $14,400 extra per year, right? Did I do the math right?
That sounds about right.
Yeah, 12 times 12, 140. Yeah, so $14,000 added to your income, that's an extra $1,200 a month that now they can say that you make per year should you buy that place. that's a pretty good deal.
Yeah, and just to clarify that a little bit more, I guess, Nick, what would be your guess? What would your mortgage payment, taxes, insurance, all that come out to on a $250,000 property?
Based off of about, our current
Just rough
annual percentage rate, let's say taxes are $3,400, property's $250,000, and your insurance is around $1,100 a year, roughly $1,900 a month.
So
that's everything included.
Right. So now you take what you would have been paying on, let's say, even $110,000 house.
Mm-hmm.
Well, it's you're probably paying $800-900 a month.
Yep.
Whereas in this situation, you come out paying $500 a month.
Yeah. If you got the $1,200, well, it would be $700-ish, but you've got that $1,200 a month coming in, and say your payment's $1,900. That's $700 a month you're paying to live in this fancy duplex.
Yep.
And
the numbers just get even better as you look at 3 units and 4 units, because there's more streams of income.
Yep.
I've seen situations where people end up making money off of these. They don't have a payment on their house because it's all paid off through those other tenants, and they actually come out ahead and they're making money just by living in this 3 or 4 unit property.
And now a $250,000 duplex is going to be way different than one that you could buy for $150,000. I mean, there are multifamily properties out there currently that are a lot less than $250,000. Now apply the same thing, because let's say you got a three and two, so a 3-bedroom and a 2-bedroom.
Right.
Well, you can live in either one, but they're going to bring X amount of dollars per month, and say you only wanted to spend $150,000, $160,000, then you're looking at, my mortgage is actually covered. So you're living somewhere for free, essentially.
Sign me up, right?
Right? Sign me up. I actually know of a triplex that's coming up for sale. It's fully rented, that I believe is right around $200,000.
Wow.
Now, that's 2 income streams right there, because you have to move into it. But you got 2 streams of revenue in a triplex. And what's that going to do? That's going to cover your mortgage.
Yep.
And you're probably making money.
Yeah, this is something I love to cover with first-time home buyers, because a lot of times they just didn't know that was possible. And then, it sets them up for the rest of their financial life. I mean, when you go to buy your next house, you can, work out a situation where you move out, you rent out that last unit, and now you have even more income.
Correct.
Or you can sell it, use all the proceeds, get a just a nicer normal single family house.
Yeah, I mean it works wonders as you utilize the income streams that are coming in from the multi-unit properties to do other things, like a lot of people have car payments, to pay those off faster so that you're not paying all of that interest over the years. That's going to free up make your debt to income lower. And debt to income is something that's highly used in the loan industry to determine on whether you're a good buyer or not. You have to have lower debt to your income. And so by buying a multi-unit property, you are doing wonders for your debt to income, because you're making more money just by buying somewhere to live.
Right. Yeah.
Right? In a nutshell.
I think that pretty much covers it.
Yeah.
Yeah.
So we would love the opportunity to, any of us, whether it's Brennan, me, or one of the other nerds, we would love to sit down with you. If you're a first-time home buyer, awesome. If you're not a first-time home buyer, still awesome. You can still do FHA loans as long as it's your primary residence.
And you don't have another FHA loan currently active.
Yeah. Yep. That's all it takes. Mm-hmm. We're going to do a more in-depth breakdown on this for you guys with a lender, I believe, in the near future. Mm-hmm. So if you have any questions, let us know now, so that way we can answer them in the future video with the professional mortgage person.
Super mortgage man.
Yeah, super mortgage man. So he'll be on one of the shows coming up here pretty soon, I'd say in the next month.
Yeah.
But until then, reach out to us and we'll help you along the way.
Absolutely.
Anything else to add?
I think that's about it for today.
All right. Well, thank you guys for tuning in. And as always, have a wonderful day and we'll see you next time.
Thanks.